Let's talk. What you wanna talk about? Let's talk. What you wanna talk about? Kitchen talk. Let's talk. What you wanna talk about? Kitchen talk. Let's talk. Conversations that cool. Kitchen talk. Let's talk. What you wanna talk about? Kitchen talk. Let's talk. Conversations that cool. Let's talk. What you wanna talk about? Let's talk. What you wanna talk about?
Oh my God, that is such a groove. I love that intro song. Welcome. This is Kitchen Talk CTC, Conversations that Cook. I am super excited to be here tonight, this afternoon, evening, whatever time of day it is. Excited to always do Kitchen Talk. It is one of my happy places. It is one of the things that brings me joy. And so I am super excited. Listen, this is going to be pre-recorded for us. So when you watch this, when it comes out, still be able to put your questions in. We'll be on the back side of it, trying to answer any questions that you may have. So feel free to chat, put it in the chat, ask your questions, and we will try to still answer those questions, even though it is pre-recorded at this time. So here with me, no stranger to the kitchen, always in the kitchen, is my Auntie V. I love her so much. It is tax time.
It is tax time.
It is tax time. So she so graciously comes every year, sometimes twice a year if we need it, to talk with us about our taxes. So this is the tax talk on Kitchen Talk. That's what we're doing today with Auntie Valencia Cain. She is the founder and owner of Jack and Dot Accounting. So welcome, Auntie V, back to the show.
Thank you. Are y'all ready for this year?
Oh my goodness. I am not, but fortunately, I don't really have to be because I have
because you have somebody that takes care of that for you. Call me.
Because I have you. But I want to give the people the info.
Right. I do think this is a year that people are going to really need understanding. And that's my real concern for coming up in 2026 calendar year, which is 2025 tax year. We do have to remember taxes is 1 year off from calendar year. We're 1 year behind every time. So when we say 2025 taxes, we're actually in calendar year 2026. But I do have a lot of concerns for this year. My reason for that is that this government is not sure what they want to do with us, to us, for us, about us. All of it is really up in the air. So a lot of things we're going to talk about is going to be things that's right now that by December 31st can change again. It does not mean it's going to stay the same, even though we're going to talk about it right now. These are the laws that we currently have, or these are the things that's currently on the plate, or these are the ideas that they currently have. But we are not 100% sure that they are going to make it to January 1. A lot of them are, a lot of them are not. Hi, JT. Thank you for coming in.
Hi, how you doing?
I'm great. How are you?
I'm great. On this nice Sunday afternoon.
I know.
It is a nice Sunday afternoon.
Yeah.
And that's not your trailer that we used to see you in.
You in one of my cars.
So let's dive in and try to figure out what this tax year is going to give us.
So before you get started, Auntie V, I want you to remind us of one thing that I was thinking about the last time we met. Okay. Was the importance of the ID.me account. Yes. If you could speak to that right quick.
So ID.me is very important for everybody to have because it does a few things. It protects your identity. So in other words, if someone decides to try to go and file a tax return or sometime even apply for anything in your name, the ID.me is going to now protect you from that, because when you do an ID.me account, you now have to upload a picture ID of yourself. So when people go to look at who or ask you to send in an ID and your ID does not match what's on your profile already, we now know there's some fraudulent activity being done in that. So that is protecting you. The ID Me also handles 3 things: unemployment, Social Security, and the Internal Revenue. Same username and same password. You don't go to those accounts anymore and create different username and passwords. You log in with ID Me and all 3 of those agencies now. So that really is helpful. And it allows you now to look at 10 years of your tax life with the Internal Revenue. You can go in and see record of accounts, accounting. You can see wages and income, anybody that reported any income in your name. And then you also get to see the tax return. Under the ID Me or the Internal Revenue, you also see any letters they sent you. If you have an identity theft PIN number, it shows you that there. Now you don't have to wait on any of that stuff to come in the mail. It's all on a profile for you. So protecting your identity is pretty big right now. And they did create a whole department at the Internal Revenue just for the identity theft. So that's where the ID Me actually came from.
Okay.
So
I'm sorry. Go ahead, JT.
So what you basically saying is I ain't gonna be able to scheme people this year?
No, you're not, JT. It's out. It's over. Sorry.
See,
But JT, keep in mind, nobody's gonna be able to scheme you either. Okay,
that's a good thing. That's a real good thing.
So if you already did a ID Me, how often should you go and update it, or do you have to
don't update it unless you want to go in and change your password, you want to change your phone number, you want to change your email, you can log into your account and do that. Let's keep in mind, people that have a business, you do not have to create an ID Me account for the business. You create one ID Me for your personal life. And then when you get ready to go to ID Me and log in, it asks you individual or business. You click on whichever one you want. Same username and same password applies.
I likes.
So the Internal Revenue is getting very close to transparency. They are streamlining everything down. They are now you're gonna get letters with a QR code on it. It's actually legitimate. Fortunately, I was a part of the creation of that when they came to creating to make you be able to scan it now to go directly to it, so you don't have to figure out what the letter is really about, because the letters, the language on there is foreign against what it actually says. So they have done a lot of things to streamline stuff down and make it very transparent, very, very taxpayer friendly.
Very cool. Very cool. And Auntie B, how long you been doing this?
25 years. I started this in 1999. I started on a whim. So a quick story to how I actually got into this. I had 2 parents diagnosed with lung cancer 30 days apart. I knew, because we were such a close-knit family, I had to find something to put in place in case my parents died. 20 years ago when they got diagnosed, cancer was already a death sentence when you heard the word. It's way different now, but back then it was that's just what it was. So I had to find something to put in place of the time when I was not going to have 2 parents to take care of or help out with or vacation with or do all the things that we did so much together. I took I signed up for a tax course, and the Friday before the course began, my mother passed away. I went to H&R Block is where I was taking it at, and I asked them for my money back, and the guy said, "Oh no, why did you initially sign up?" I explained it to him. He said, "Well, the process has already began, so you might as well take the class." I say, "Sir, I got a daddy now to take care of. All I need is my money back." He said, "I'm not going to give it back to you. You might as well take the class." So I went to class, 12 weeks. For 6 weeks, I didn't talk to nobody. I didn't say anything because I'm anal. I wasn't going to give my money away. I went. They wasn't going to give it back to me. So 6 weeks in, at the end of a class on a Friday, he said, "Oh, and by the way, midterms are coming up. And I'm going to do y'all a favor. I'm going to give y'all the information so y'all can do the midterms this weekend." It was a book about, 40 pages. Because when I learned taxes, it was on paper. It was no computer. So I was like, when I got in my car that night, I say, "Self, what we going to do? We ain't talking about in 6 weeks. I don't know how the world we finna do this." But I went home that Friday, and I did not sleep until Sunday about noon when I finished the midterm test.
Wow.
And fortunately, I was the only one in my class that aced the midterm.
Of course you did.
I couldn't be beat. I don't like to be beat, so That's my issue. That's my issue. I don't like to be beat. So I aced the midterm, and then I end up becoming working for Block, doing the team lead first. Then I taught taxes for them, and then I managed for them, and then I went on my own. So that's my story.
I knew a little bit of it, but not all of it. So yes. I know you've been doing this for a while.
This is my 25th year. Yes.
25 years. And this is actually where you and Mommy met, right?
At H&R Block, yes.
At H&R Block.
When I managed, she came and worked for me, yes.
And then you couldn't get rid of her no more.
No, she was stuck at the hip. She was not going.
Yes. So I know you got a list of stuff that you want to chat with us about. So let's dig right in.
Okay, so let's start with the people that think everything matters, and that's the people with the dependent children. Child tax credit is going to increase this upcoming tax year. Well, I'm gonna keep saying it is, but it's supposed to. I know, JT, it's not gonna be much, so don't even matter. It's not gonna be much, so it don't even matter. But let's do some backstory on everything we're going to talk about, because I need y'all to keep in mind that everything has a phase out, which means at a certain income bracket it no longer applies, or a lower income bracket it doesn't apply. So no tax law is given based on the way it's written. What they keep leaving out is the small print. Rules and regulations, qualifications, phase out amounts. None of that applies if you don't meet all the criteria. You got to have the requirements. You got to meet the requirements. So every law has requirements, but the base to every requirement is how old, how much income. Those are the base two requirements. Everything has a requirement. Child tax credit also has a requirement. You have to be between 0 and 16 in order to get child tax credit. Anybody 17 years and above do not get that $2,200 that they're talking about. They only get $500.
$2,200.
Phase out at.
Somebody got to let me claim their child.
That's a jail sentence now, so I need you not to do that. That's where you're going. So I'm keeping you out of jail too, JT. I'm gonna help you out. But no, they are cracking down so hard on the claim of dependence. When COVID happened and the stimulus check, everybody who was selling their kids off then wanted the stimulus checks. Well, they weren't entitled to it because the person who claimed the child had the income to qualify for the stimulus. So they should have gotten a check. So parents then start turning in the people that they were selling their child to because they wanted the stimulus check. So it happened. So now the government says, hey, I know where your children is. I am tied into your doctor's records. I'm tied into your school records. I'm tied into your welfare and food stamp records. Put a child on the tax return if you want to, and I'm gonna tell you where the child belongs.
Oh wow!
So that's how deep.
Can't get over on the government.
Not anymore. Not as. But the bad seeds made it good for those people who was getting over comfortably. Those people who wanted to now turn in those people who didn't give them the stimulus checks. Now they have made them create a whole set of rules and laws based on this is how we're gonna catch you now.
Wow. So if your child is 17, still in high school, you still taking care of them, you get less money?
Yes. You get less money.
Yes. That's crazy.
But you still fully taking care of them.
Well, let's watch the other side of the nugget. Yes, you are still taking care of them. Now, let's say your child graduate high school at 18 years old and decide not to go to college, but still lives in your house. Guess how much earned income credit you get for him then? $0.00.
Oh boy! I mean, well, they are grown at that point.
No, they're not. No, and this is why I say they're not. No, and this is why I say they're not. The government now tells you have to provide insurance for your child until they're 24 years old. Why can't I get the benefits for them until they're 24? You gave me a half over here where you cut me off, but then you gave me a requirement over here that I got to do.
Oh, that's crazy.
You can't tilt me upside down and tell me I gotta take this. You told me at 18, JT, like he said, they're considered grown. So they're not working. They're still eating my food, using up my light bill, bothering my cable. but I could claim them as a dependent only for head of household purposes only. But I'm going to get nothing but $500 earned income credit for them. And if my income is too high, I'm getting $0 in earned income credit where the money comes from. So that's hurtful already. But then there's a button we have to click and says, is this child in college? Yes or no? That determines whether the earning credit kicks in or kicks out. If I say yes, they're in college, earned income credit now kicks in. If I say no, they're not in college, earned income credit now kicks out, but they're still eating and sleeping in my house. I'm still taking care of them. But then you tell me I got to carry insurance on them till they're 24.
I feel like something got to give. I'm not. That's crazy to me. That's crazy to
It doesn't
me.
go together. It's not a mesh where it actually fits the narrative of nobody in real life. It doesn't go together.
Yeah.
If I'm not going to be able to get the money for them, I should not have to have insurance on them.
Yeah.
I shouldn't have to do both. So if your children do not get out and go to college, I don't care if it's a trade school, I don't care what it is. They got to go somewhere so that parent can benefit. And so they can actually benefit going forward, because financial aid is based on the parent, not on the child. A child cannot declare themselves an independent unless they under the foster care system. So there's rules behind all of this, and they all wishy-washy all the time. And yeah, unfortunately, we have to keep up with them. All the laws and rules that go with all this stuff.
That's crazy.
Yeah.
That's beyond crazy. That's insane.
That's insane.
It is.
So the people with children, anybody that watches as a kid, as a college student, do not file your tax returns without your parent permission. People are going to these colleges and saying you could claim your own, you could get your own money, you could do all that. No one is telling you the backdoor stories that when financial aid gets whiffed that you got a return and your mother has a return with you on it, they're going to kick you off of financial aid 100%. You're going to get nothing.
Wow.
Unless those two tax returns get amended and you go back on that parent tax return and you only claim yourself as a non-dependent on your own. So if a child works, they can claim themselves as a dependent of someone else's. Whatever is in box 2 of that W-2 is all the refund they're going to get anyway until they're 25 years old. They're going to get that little $2 anyway. You're already working part-time and ain't paying no taxes, no way. So you're not going to get anything anyway. But don't hurt that parent and don't hurt your chances for financial aid.
Wow. I didn't know they was kicking them out of financial aid.
Oh, yeah. It's bad.
But they don't want nobody to get anything, huh?
It's bad. Because people are just not following the rules. If you follow the rules, there is a scapegoat to the rule. Every law the IRS creates, they create a way around it. They create a work through. So I do take another course that teaches you to work through. So there's a work through. You can get around anything. Just don't think you're going to be able to do it the way your friends say they doing theirs, or your friend mama say, boy, you might as well get your money. Your mama getting your money. No, they're not. Your mama still feeding your butt when you don't have nothing else to do.
Right.
So don't harm her by getting that little $2 that she getting for you on the tax return.
Right.
But that's what people are teaching these kids. And colleges have people in the lobbies of these places saying, file your own taxes. Do it. No. Take it back to your mama.
Wow.
Yeah. Give it back to that person who tax return you actually own and how you going to benefit from it. So now these schools, even Florida State College here, I just had a case where they wouldn't even let her child get near graduation because mom ended up reporting that she got married and her and the new husband was not on the same tax return. They said, we need an amended return to show y'all together, or she can't get this aid.
Wow.
Yes.
So not even her father.
No, but mom got a new husband with income on there. So if that income is high enough, that kid can't get financial aid anyway because now they're over the threshold.
But they ain't got nothing to do with her mama or her.
Mama should have never said she got married.
Ooh, shit.
Lord.
You got to learn the laws. I mean, they are there.
And I think the part that really trips me is that I'm earning the money and you Uncle Sam just take it before it even get to my hand.
But Uncle Sam
And
helping you out
then
by
have
not letting
all
these
kind
people
of
get
ways
extra money.
for me not to get it back.
He helping you out by not letting them spend up the money any kind of way now. He's saving you a little bit there.
I guess.
Wow. That's
What you
crazy.
got for me, JT? I'm ready. Go. Nothing.
I'm sorry. I am at a loss for words. At one point in my life, first time in my life, I am at a loss for words because I cannot believe that they got all of this going on. I'm driving too, so I'm trying to pay attention to the road. But I cannot believe they got all of this going on. And I'm taking care of an 18-year-old kid that I can't get no money from. Like, what is that?
Well, the only money you're gonna get if they're not a student is the head of household
500.
father status. That is money. You're gonna get something on that. But if the kid is in school, you're gonna be able to claim the 1098T from the school as a parent. You're gonna get money back from that. And then the earned income credit will kick in if they're in school. So you'll get money back on that. So there are things following those set of rules or making that child meet that criteria. Then the money comes with that. When you don't meet the criteria, then it goes out the window.
So you can't just be at home doing nothing.
Oh, no. You got to do something with yourself.
You got to do something with yourself.
You got to do. If it's trade school, I don't care what it is. You got to do something with yourself.
Yeah.
Welding, electrician. Find one of these apprentice programs they're giving away like 90 going north. Heating, air conditioning, electrician, plumbing.
Okay.
They doing these apprentice programs, paying you $36 an hour just to take the program. Hey, do one of those.
I actually got he's not really a friend, I ain't gonna say a friend, but an acquaintance of mine. That dude, he took welding, and now he making almost $200,000 a year.
Absolutely.
And I'm like, bro, I wish I went into the wrong thing. What? I don't need this degree from FAMU. I could have I could have been welding somewhere and making way more money.
But it's different now than then. Back then, you needed that degree. Now, the trade schools are offering so much that people are not doing as much 4-year and 5-year college as they used to, because in our era, we were taught college. Yeah. Now they're taught trade school, apprentice programs, and all of that. And they are coming out making a lot of money.
All right.
That is too. You could see that in our leadership.
Yes.
Because our leadership is not educated in that way. So they're coming for all the schools, all
right.
Higher education.
Yes.
So yeah. So it's crazy.
So yes. So one of the next things that we actually are going to go over is tax brackets.
Oh Lord.
Tax brackets is one of those things where the higher your income becomes, the more in taxes that you're supposed to pay in order to break even or get $2 back at the end of the year. Your goal is always to attempt to break even. Okay. There is a new set of brackets, and the brackets change every year. So depending on what your income is, what percentage of taxes that you should pay in. Now, when we was at the Clinton administration and stuff like that, we was a 6%, 10%, blah, 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 blah. When this current president came in office the first time, he changed all the brackets. Our 6 and our 10 went away. We went 12, 15, 20, 24, like that. 37 was the highest. So most companies, what they did to you was reduced how much taxes you were paying in, did not notify you because the government gave them the authority not to tell you until it was time for you to file your taxes. And you got in this office, and then I say you owe $8,000, and you say, what the I'm like, well, this is why you owe it. Well, nothing changed. So then I asked one question to people. Did you not notice you were getting $50 a pay period more? Oh, yeah, I noticed it. Well, where did you think it was coming from? If you saw it and you were happy with it because you were able to buy that next pair of shoes, now tax time, you got to pay that back. Because all you don't put in the cookie jar, they are going to take from you when you file, but all you put in, they're going to reward you for it. So pay the taxes. Make sure your W-4 reads correctly. Make sure at least 10% of your salary is your taxable numbers. That's not the right number for everybody, but that's a good start for everybody to start at. No less than 10% of what you're earning should be in taxes. If you are paying more than that, that means you're in a higher income bracket, and you should be paying more than that. So you do want to do something to make yourself even out, so you don't owe a whole lot of money at the end of the year. You do not want to do that.
No, you don't. I
So if
remember
you're a
one
single
year.
person, yeah, you want to make sure you're in a bracket. So everything that's happening is going according to your filing status. So if you're filing single, you're filing married, you're filing married, filing joint, you're filing married, filing separate. Those numbers are based on that. Your standard deduction, which is going to be our next subject, is also based on that. So standard deduction gives you this. This is how it really works. Let's say you make $50,000 a year, right? Let's give you your 50 up here. Your standard deduction for a single person is going to be what? $16,100, right? So that's you, Lisa, no dependent children on tax return, just you. You make your 50. I'm going to subtract 16,100 from your 50, and whatever that number is, that becomes your adjusted gross income and your taxable income. That's the number you're going to pay the taxes on, not the entire 50. And that's why they give you a standard deduction every year. Every year the standard increases. So it's beneficial when the standard increases because it helps the taxpayer owe less taxes on the earnings they have. And it does help those people who don't pay the right amount of taxes reduce by a lot. So that's a government given. Every year it increases. So single people standard deduction this year is $16,100. Married, filing joint or surviving spouse is $32,200. If you're a married filing separate person, it's $16,100. If you're a head of household tax filer, your standard deduction is $24,150. So it helps reduces you. So it helps saves a lot of people. But those people who make $80,000 and pay zero in taxes, there's no help for you. Standard deduction is only going to tap you, but it's not going to help you because you chose to give nothing back out of all you made. And I have a lot of people who do that. I worry about at the end of the year, but you're never out of debt. You're never going to get out of debt that way. And creating debt for yourself is even worse because your unpaid amount is taxed daily. And they tell you what you're anywhere between 1% to 3%. You're going to pay extra taxes. So that's why people say, I'm in debt, I never get out. You're right, because you created it for an unknown reason and you did nothing about it, or you just didn't answer the letters, or you did whatever. You got to seek help for that, because there are ways and there are programs directly with the Internal Revenue, like Fresh Start Initiative and all of those things. You don't need to call an outside program to get those things done. The Internal Revenue would do that with you directly themselves. So when all these programs come on TV and tell you, oh, call, my debt was reduced by, no one tells you that you have to pay that company $5,000 for them to even do any work for you. If you got $5,000, you can put it on your debt.
Right.
They don't tell you the real deal.
$5,000 for them to call the IRS and get your debt reduced.
They say they're doing it themselves. So the only reason I know how it works, I am anal enough to try programs every year. I spend my money on them to see what lies are they telling you. I pay for it. The security with protecting your identity, I pay for stuff like that just to see what they do for you. I pay for, and I have paid for people to tell you, clean your credit. I do stuff. I can't tell you how it works if I have not done it. I physically do it to see what it is. And I spend a lot of money on some crap just to see what it do. But I will sue you.
You ever feel like you wasted?
I will sue you and get my money back. So don't worry. I do try it this way. And I do sue them and get my money back in most cases. Because you didn't do what you said you were going to do. And you don't. So if you have debt and you really know you got debt, just call the IRS collections department and say, hey, I need to know what program you got for me in order to help me get out of this debt. They will tell you, Fresh Start Initiative. Keep in mind, when they tell you that's not the only one they got 4 or 5 of them over there. But when you get ready to call, have your bills already in front of you. Light bill, water bill, cable bill, your hair salon bill. I don't care what it is, your laundry, how much, your insurance, your car, your everything, because your income is here. If you can eat up the majority of that income, they can reduce that tax debt. You got to be able to eat it up. You can't have $3,000 a month left over and tell them I don't have no money to pay you. Yes, you do. But if I eat this down to $500 a month, that's all I got left. They're going to work with you. They're going to put you on a program. You're going to follow that program. They're going to tell you how long. Just be careful of offering compromise, because that's a whole different set of rules. And if you ever break that offer, all the debt comes back.
Oh, wow.
That's why I say they have multiple programs. But they do talk you through them. They're great about that right now. So they do want you out of debt. So if you don't want to call me and I tell you how to get it done or help you get it done, if you want to call the IRS themselves directly, they will help you get that done. Yeah. 1-800-829-1040. Somebody will help you get that done. Or call, when you hit the prompts, do the collections department, because you already got a letter from a collections anyway. There's a number on there. Call that number and you can get some help. So that's easier. Any standard deduction questions? Because I done jumped and skipped. I'm sorry.
That's all right. No. This good information. It didn't just go round. So just to be on the safe side, you need to make sure that they are taking at least 10%.
No less than
10% of your earnings in order to possibly make sure you break even.
Hopefully, yeah. And that's really going to depend on the income bracket. So, for example, we do now have back the 10% bracket came back. It's coming back for next year.
Okay.
Right? And that's for our lower income people. So we going 10, 12, 15, 20, 22, 24, 37. Percentage of taxes that people will be paying based on their earnings. That $12,000 is our 10%. We go like $49,000, it's going to give us 12% tax bracket. So that's how it's going to increase. But on irs.gov, if you type in tax bracket, it's going to give you a whole form to show you just what the brackets break down to.
Wow.
Yeah. So that we need to know the brackets on that. This one is pretty interesting. And JT, you probably should have stayed. Interest.
Knowing him, he'll pop back in.
Interest on car loans.
I don't
if
have
people heard anything about that, this is big and very, very new. Now, this does not mean that the vehicle has to be in a business name. It cannot be in order to qualify. It cannot be a business vehicle to qualify. So the set of rules, again, we talked about everything had a set of rules. The set of rules for the car loan interest, they are creating a new section on a tax return to handle just this one thing. So the tax form is going to look different because they now have to put a section in for this. You also must have the VIN number of the vehicle that you're using to see, does it even qualify? Now, this has nothing to do with the hybrid vehicles that people bought for the $7,500 credit or whatever. Nothing to do with that. And they're taking that away. 100% is going away. If it ever comes back, a word of advice, people, don't do it on your tax return. Do it at the dealership. Learn the sticker price first. Make them take off that $7,500, and then that's your new number. Because otherwise, they're going to cheat you. On a tax return, there's a set of rules, and a lot of people didn't qualify because, even though they were told at the dealership they would, because if you don't have earned income, which means you're working and getting a paycheck, You did not qualify for the $7,500 on the tax return, but you did qualify for it at the dealership if you had taken it there. Retired people who going out and buying these hybrid vehicles and want to do it on the tax return don't qualify because they don't have earned income. The money that they're receiving is money they previously earned and getting a benefit from it now. So that's not considered earned income.
Oh, wow.
So that's why I'm saying if you want to do that, take it out, take those credits at the dealership. But this interest on a car loan is way different. So it's a new section. You must have the VIN number. So for tax years 2025, which is coming up, through 2028, which is how this is supposed to work. Okay. You can deduct up to $10,000 of interest paid on a loan used to purchase a qualified vehicle for personal use only. This deduction is available for standard deduction and itemized deduction methods. If it was a leased vehicle, it do not qualify. The car dealerships or the loan companies, will now give you a tax document related to this interest on a car loan.
Wow.
That's how you're going to know how much you paid in. And that's how we're going to know how to put it on a tax return, because you will now get something from the lender.
Oh, so I need to buy my Escalade next year then.
Hey, do what you're going to do, girl. So anybody that's claiming more than $600 of interest on payments will get a document from the lender. Okay. Anybody that's paid anything over $600, you will get something from the lender. Again, you have to qualify. Your vehicle has to be one purchased in the time frame. It has to be for personal use. It cannot be in a company name. It cannot be a lease. And you must have the document from the lender. Without all of that, you will not be able to take the credit for that vehicle on a tax return.
All right. Well, I'm getting my Escalade next year.
So, yeah. So is
this like some kind, like, I'm feeling like this is a little tag team between the government and the auto industry. They want us to start buying some cars.
They do want you to buy vehicles, and they're trying to give credits. But the problem has become over the years, in my opinion, is that anytime things like this come about, I do think it's a tag team, like you said. But I also feel as though the industry need help getting people to buy, because people are not buying like they used to, because there's just not enough revenue and stuff in the market anymore for that. So it kind of cut out on that. But also, I think the government has to buy into this. But at this point, I think they get to know a little bit more about you this way.
Oh,
to me. So you may be, let's just jump off the Richter scale here for a second. You may be a person who says, I owe all this money, but I can't afford to pay the government back. But on the flip side, I just went out and bought an $80,000 vehicle. You see what I'm saying?
Yeah.
I think it's a checks and balance system. Do I want to really put myself into that until I fix this? Let me get this over here fixed with internal revenue before I decide to jump out here and do this, because I just told them I don't have any money to pay them.
Oh, so when you buy the car, it's like an automatic alert to the.
It is not
government?
necessarily an automatic alert. I just think a little bit crazily and differently to say, what is the real sole root cause of why you're giving this credit away? So to make you think outside the box a little bit differently.
I got you.
Instead of us just saying, oh, they're helping us. Nothing is free, not even the air you breathe. So down the line, how am I going to pay for this?
Yeah.
How's this going to hurt me or help me, or however it comes? Just think outside the box before we take on a lot of this stuff.
Yeah, Look at
it through a small straw now before we just bite into everything that comes along, because at some point, what is the real root cause? How and why you could all of a sudden offer me up to $10,000 at one time. Hey.
Yeah. Wow.
That's just my, don't let me deter y'all, but that's just my warped train of thought. I've been doing this too long. That's just my warped train of thought to say, I've seen so many of these. I've seen it with home buyers credit. I've seen it with home buyers credit 2007. They didn't have to pay their money back. If you bought a house in 2008, you had to pay your money back. How is that fair to those people?
Yeah.
You see the difference in what I'm saying? There are just too many things that has happened throughout this government and through this time of my 25 years in this industry that I've seen a flip and a flop, and a flip and a flop. And hybrid vehicles did the same thing. You gave these people all this hybrid. Now you're taking all of that away. Wait a minute. They went out and bought the car so they could get the credit.
Yeah.
So that's what I'm saying. Just let's think a little bit outside the box. When we jump on these things, they're there. All of it is a part of the big, beautiful bill, of course. And that's the main topics of the subjects that I have today. And that's where this come from. To let you know what this bill really is saying. Because there's some real rude stuff in the bill.
Wow.
That we're not, like, we're going to move on to the next one that's rude for real. And I'm going to give you a side tidbit on this brain on that one too. Tipped employees. So everybody is saying that I'm a tipped employee and I don't have to report all of my earnings. Now I get to reduce it by so much money and da-da-da-da-da-da-da-da. Okay. It's only going to benefit a certain group of people. It is not going to benefit everybody. And when I say group of people, I mean middle to upper class is who's going to benefit. My lower class people, y'all are not going to benefit from this, contrary to what you think. Right? So, tipped employees can expect a significant change in regulation starting in 2025. Right? They can potentially lower their income by $25,000 per tax return. Right?
Mm-hmm.
Now, the deduction applies to tips reported correctly on tax forms, allowing more of the earned tips to remain in your pocket. That's what the bill says, which could be true. But now, let me flip around and give you a second tidbit on that. I make $25,000 a year as a server. Let's say $10,000 of that is my tips, right?
Mm-hmm.
So according to my W-2 now, I should only be making $15,000, right?
Mm-hmm.
You just took away a portion of my earned income credit for my kids because you took away my income.
Oh.
If it's not on the W-2 to be income, you can't get credit for it because you don't have the income. Not only did you take away that, you took away some of my child tax credit too, because I told you earlier, everything was money, age, requirements. We got some, right? So if you take away my tips that I'm using as a part of my income, how can I now rent the next apartment? Because my income just been reduced. I don't have enough money, according to the rent people, to pay rent no more.
Oh, wow.
See the harmful sides to it? And everybody was so happy because those are my lower income people. They're hurt now. It only is going to help my middle class and my upper class income-based people because it's going to help them reduce their income, help reduce how much taxes they pay in, help reduce their taxable income. It benefited those people because they had $100,000 to play with in the beginning. My lower income only had 25 or 30. If they had 40, they was doing great.
Wow.
But you need no less than $10,000 of earned income to qualify for earned income credit. But that don't give you the max for your 3 dependent children that you could get earned income for if your income is $10,000. You're not going to get the $8,500 that them children would have given you because you just took $10,000 of my income away, and I need that for earned income credit. So my lower income, it's not going to do you any good. Don't let them people play with your tips. Keep your tips as earned income.
So I know I've been going to some places like the nail salon. They'll say like, "Oh, can you tip in cash?"
That's why.
And stuff like that. So if you tip in cash, they don't have to report that. Or
Now,
they were saying if you tip like from your card, they will have to report that as income, and they
right,
will be taxed on it.
right. So let's talk about that. That's a good point. Tipping in cash for people means that they just don't report that to their employer. They just don't. So they get to take all that money home with them that day, and do whatever they need to do with it, pay the light bill, whatever. The majority of people automatically use a card, and they tip is on the card. So the tip becomes a part of their income. But in these nail salons, they already making $70,000 to $80,000 a year. They don't want that extra on there for them tips because they already above.
Oh, I didn't know they was doing it like that.
If your nails cost you between $30 and $60, and you do 15 a day, go that by 6 days a week, and what you think they got?
Well, you know what? You're right about that.
If you halfway just picture the numbers in your brain, it gave you that big number.
They making more money than me. $90,000, $80,000, $90,000. Lord have mercy.
Just think about it now. If you really look at how the salon works and who's the owner or whatever, and a lot of salons, those nail places, because there's so many people are working in there, there's an owner, and she have a set of rules that she's taking a portion of your money anyway for this shop if you're buying the supplies.
Yeah.
So either you're gonna be capped out at $35,000 a year's income. You need them tips to make yourself buy instead of now giving her a portion of your tips too. Now the law says all tips should be reported, whether they cash or card. But that is not what people typically do. But on box 7 of a W-2, it have a tip box. It puts a number in there. That tips go back towards your income. So it's depending on what service industry you're in.
Yeah.
And how that's actually working.
Yeah.
Yeah. So, I mean, there's a lot to that too. So, and then you have to think with this tipped employees still need to withhold taxes from the tips. But the availability to reduce these tips will help reduce the overall taxability. You still need to report tips to your employer for the IRS, according to what this law actually says for tipped employees. So they still have to. You're still supposed to report the tips.
I'm about to learn how to do my own nails.
Yeah, that might be. Yeah. So
I just like while you was talking, I was like, let me put this in the calculator. Yeah, they can potentially make like $100,000.
Potentially they can, especially if they own their own. Now they don't make as much when they're in a salon with other people because the owner of that salon is getting a 50% portion of what they're bringing in.
Yeah.
Because they're providing all the supplies, the equipment, the whole 9 yards. So they're making the bulk of the money.
Right.
But potentially they can.
But I mean, if you go to the nail salon just to get a manicure, you're paying $30.
Exactly.
At bare minimum.
Right. Right.
Yeah.
So if you think of that by how many people you already see in there when you're there, imagine that many people is in there that hour
that
every day.
Is like this.
It's a constant turnaround. So yes, it's a lot of money being made in those salons, and that's why this thing says, how does no tax on tips work? Where you could deduct the $25,000, but if you're a married couple filing joint, you could deduct up to $40,000 on the tips.
Wow.
So again, everything has a set of rules, requirements, and we just have to meet them. And then everything phases out. So for single people, your phase out gonna be 150,000, and for married filing joint people, it's 300,000. See how high the income just went?
Yeah.
Yeah, your phase outs is phase out, and by your filing status, you must have a valid Social Security number when you're trying to be one of these people who reduce the tips.
Mm-hmm.
It can't be the I-10 people. It can't be anybody. It has to be a valid Social Security number person. Because there's all kind of filers now. Just because we have a social, everybody don't have one.
Right.
They still get the file. So you have to follow those rules too.
Wow.
So I know that's a lot. The next big thing is going to be overtime pay.
Oh,
Overtime pay was a big one because people wanted some help with overtime pay, and the government said, "Oh, they're going to give you some help with this overtime pay, and they're going to do all this stuff like that." So this is a law from 2025 to 2028 also. It's going to go in effect January 2025. Workers will be able to deduct up to $12,500 of qualified overtime compensation from their federal income taxes. This is a deduction for non-exempt employees. So y'all salaried and exempt people do not qualify for this.
We don't get overtime pay.
You don't get overtime pay. They do not qualify this. And it is available regardless of whether there's itemized deductions on the tax return. So you can itemize or you cannot itemize. It doesn't matter. This rule still can qualify. There is a phase out for higher earners of 150,000 to 300,000, of course, again. It does not eliminate tax on overtime pay. It only applies to a premium portion of your overtime. So again, these companies is going to have to break down the overtime, the portion that's eligible, the portion that's not eligible. So we may see a difference in a W-2 this year for those people who does get overtime pay. You may see a difference in that. You still will be paying Social Security and Medicare taxes on the overtime earnings. You're still going to be paying that. You just won't be paying as much federal withholding on the overtime money as you would have done before. So we really got to see the differences in the earnings and how that is going to show up on a W-2.
Because before, like when you got overtime, it seemed like it was like extra money coming out, right?
About 28%. Yeah, but they're going to give you that $12,500. That overtime pay is going to do two things. It's going to have above the line and below the line deductions. Above the line is just meaning that you don't need to itemize to claim the deduction.
Okay.
That's all that is. And it does lower your adjusted gross income, which means it lowers the amount of money that you're going to have to pay taxes on a tax return.
Okay.
So it does help that. When it comes to, you must have a valid Social Security number. If you are filing a married filing separate tax return, that overtime reduction does not apply to you.
Oh.
Married filing separate is one of the worst filing statuses ever, and this deduction does not apply to married filing separate people.
Wow.
So
your overtime can also put you in another bracket, right?
It can, yes. Yes. Yeah. And then if you got tips doing the overtime, the tips don't qualify to be reduced.
Oh my.
In that case, the tips is now income.
So this kind of like when they give you them coupons or on the websites and they be like, oh, you can only use one of them.
Yes, that. So a lot of this stuff is already in motion, already set and told us this is what it's going to be. But I'm looking at a lot of this stuff to actually change. But at that point, we'll probably come back in January and tell you what the changes is. But right now, this is what it actually says it's going to be.
Yeah.
And these are the big things on the totem pole for right now. So this is the big stuff that's actually being looked at the most.
Wow.
So, yeah. And then we had something called inflation adjustments. Inflation adjustments just was basically things to help the taxpayer reduce some of the income, reduce some of the taxable portions of the money. It was supposed to do a whole lot of all of that stuff. Because they're not truly set in stone now, you may get some different inflation adjustments to come about. You may see changes that you don't like or don't understand because that's just what the government gonna do. We just don't know what they're gonna do at that point. But at that point, your inflation adjustments are just gonna inflate to be real high for some people or real low for some people. And it is going to be based on your filing status, your income brackets. That's when you're going to either see the help or the hurt. Nobody across the board is going to see a true benefit in all brackets, is what I'm saying. All single head of household filing status, though everybody's not going to see a good across the board to that. So your inflation adjustments are going to just do that. You're going to see tax situations where your increased standard deduction is going to be there. Your tax exempt is going to be there. Universal tariffs is going to be a part of your inflation adjustment. Economic impact, which is your GDP, which is 1.2% reducing. It's going to reduce the revenue by $4 million. They hoping by doing some of these things is going to actually benefit some of these causes. It may and may not. We don't know. It may not. Any questions so far?
Oh my gosh.
I know that was a lot, and that's not the beginning. That's not the end, but okay.
It is. It's a lot going on.
It is a lot going on. It's a lot going on. People, just make sure your W-4 is right. Make sure you're paying some taxes. Make sure you get the ID.me accounts. Make sure that these kids is in school. Make sure you get that 1098 from those colleges so parents can claim that education credit. A child cannot claim that until they're 25 years old. So it is on the parent to actually be able to claim that and get the benefit for it back. Child care is another thing that may come up on the totem pole that may be a big, big benefit to the people that has small children, because they're looking at bringing back child care and giving you dollar on the dollar of what you put in. That would be great for a lot of people. We don't know how far that's going to make it, but that's something actually in discussion mode at this point. They did it last year, gave you like about 3-4 years ago, it gave you like 50% of it back. So it did benefit people a lot. So that is something that's back on the table. Some of the laws that is there now is still there, and they are not going to change. They are not going to reduce. So it's a lot of laws that's just that we have been accustomed to that we're going to still keep. And a lot of them is going to change so fast. And be aware that in the tax season next year, laws are going to rapidly change while you are filing. So your friend can be doing one thing. Your friend can be doing one thing today, and tomorrow yours is not going to look like that.
Wow.
Another thing, people, please keep in mind, no two tax returns will ever be the same. Even though you work at the same place, you have the same amount of children, you make the same amount of money, your taxes is going to be different for one reason or another. Something about your life is one smidget different from that other person's. So when you're talking to your friends and say, girl, you didn't do yours right. Oh, no, they probably did. Your life is different from her life, or her life is different from yours. No two is ever going to be the same. So don't expect them to have two of the same tax returns. It's not going to work that way.
So, Auntie V, would you suggest that nobody do their taxes on their own, that they really do get a professional? I mean, I'm listening to all of this. I could not imagine sitting down trying to do my taxes.
I would suggest that, and I have suggested that the past couple of years, because one of the things that I've always told people that these things are changing so fast, especially with this administration. The problem with people is that they just don't want to pay somebody $2 to do it. That's the problem. And if you are one of those people, continue to do it yourself. Do not go to anybody's office and barter with them on how much this costs. You just shouldn't. Yeah. You don't. You just shouldn't. Their expertise Is what you have to depend on. Now, I will say this. If you go somewhere and you don't understand, you don't like, or nobody's explaining anything to you, get your documents and please walk away and find somebody that really will explain things to you from A to Z. You should not entrust your documents to anybody that cannot give you a simple breakdown. If you ask a question, you should be able to get an answer. Even if that person says, let me look it up, I'm better with that than them telling you nothing. Okay. Another thing I find people are doing that I find very disturbing is that you're just dropping your stuff off to people randomly that you freaking don't know. Or this your first time using them. Or they say the only way I do taxes is everybody just drop their stuff off and you come back later. Why? You don't know them. If you don't currently have a relationship with your accountant or your tax preparer, do not take your stuff to those people's office and drop it off and expect a result, because you're not going to get one. What you're going to get is cheated.
Wow.
And that's just truthful. Find a person that you can form a relationship with, that you can have a conversation with, that you can explain, this is my expectations, and you could ask of their expectation. You can tell them what you expect. If you go somewhere and you don't like the outcome, or you don't believe they used all your documents, or nobody explains that tax return to you from A to Z, don't stay there. Because for me, I do have an app. A lot of people put it in. I have a lot of military people. For me, I have Bahrain, Germany, Japan, Costa Rica, Africa, Afghanistan, Cuba. Those people are not in my face, but they put their stuff in the app. When I get done, or when I have questions about their stuff, I either chat them immediately, I text them, I call them. I got questions on why this is not here. This was here last year. This is not here this year. What is this about? You give me an answer. When we get completed, I send you a physical copy of that entire tax return. I get on the phone with you. I explain to you every line on that return.
Yeah.
You need to know what you got, why you got it. You told me, is my student loan interest on there? Oh, yeah, look online, such and such and such. Look on schedule, such and such and such. This is where your student loan shows up at. That proves to you I put it on the return. You get to ask questions. If people don't want you asking questions, please don't do business with those people. Find you somebody else that you can physically have a relationship with, more so a conversation with, that they could explain this taxes to you. They could tell you why this was on this form, why it's not on that form. If people cannot do that, you are not in a good place. I need you to find somebody else, because when the audit comes, those people are going to run and hide, and nobody's going to help you with that audit. When the IRS send you that bill is solely on you, because you signed the tax return confirming you understood it and you knew what was on it.
Yep.
So now it becomes your fault. And then you want to call somebody like me saying, I need help. And you don't physically have a copy of the tax return. Never, ever, ever let somebody do your taxes who don't give you a physical copy.
Yeah.
I found that so bad this year. I'm still working with people trying to get copies. They don't know what the tax return even is, because their people did not give them copies.
Wow.
And they thought it was okay. They just got the money and they didn't. It just was nothing. So those are big, big, big things that we are actually seeing. And you really need to be very, very careful of that. You cannot trust this your life.
Yeah.
And we're going to see more audit letters in 2026 than we have ever seen in our entire lives. They've already started coming out. You're going to see two versions. You're going to see a soft audit and a hard audit. A soft audit means that this is a case I had. The IRS says, send me a copy of their mortgage interest statement to show that they actually had a mortgage. Lady provided it. IRS said, okay, it's over. Another case says, send me the other W-2 that you actually had. Lady said, I only have one job. Look into her ID me. I said, ma'am, you got two jobs. When did you work this job? She said, I never worked that job. Somebody used your social security number and put a whole W-2 in your name.
Wow.
It's in your name, though, ma'am. Now, there's a whole nother set of rules we got to follow with that, because now I got to clear you from that, because the government said it belongs to you. So now I got to actually walk you through a whole process and do a whole bunch of paperwork to get you to figure out who W-2 is this really.
W-2 with your stuff
with your name and your social on it.
On it.
The whole social security number is there. So somebody got your information that they shouldn't have. But what you find is that Uber, I'm an Uber, you're not an Uber driver, or you're my best friend that's struggling and you need a part-time job, and I give you my social to do Uber under my name, the tax document come to me, not to her.
Why would you do that, though?
Ask the people who doing it, man. I don't know.
That's crazy.
So you have a lot of those cases.
Whew, Auntie V, you have definitely given us a lot of food for thoughts. And again, I am so appreciative that I don't even have to worry about all of this. I'll be like, here go my stuff. What else you need? Y'all, find y'all somebody. Find y'all an Auntie V. This is my Auntie V.
Find somebody that you can truly
She'll
trust.
help you too. She'll help you too.
Yeah, I get you through it. Come on.
Yeah, this is her information, Jacket accounting. That is her number. This is her email. Best in the business, educated, all of it. So, and you could trust her. She gonna tell you the truth.
That's true. If you don't want the truth, don't call me.
Don't call her. Yeah,
I can't sugarcoat life for you. I'm gonna walk you through this process and make it easy on you, but you got to be ready to take the hard knocks when I give them to you. Because if there's a situation, I need you not to do this again, and I need you to be educated and prepared onto why we won't get into this trouble again.
Yeah, and she mean it.
Yeah, she do. She do.
Oh my goodness. Thank you so much. Thank you so much, Auntie V, for hanging out with me and giving us this tax talk. Appreciate you so much. And I guess if I reach out or you could reach out, well, we talk, but you could let me know if we need to do another one with whatever's changing. Because
if we do, it'll be the first weekend in January. So by December 31st, we'll have all the updates on what they are actually doing. So we'll know what forms is going to be available and not available. So I can actually tell you not to be alarmed, but it's coming or it's not coming at all. So we'll know what we're doing. Okay.
Well, let's plan on that. So the first of January to do another one, because it's important that people know, like it's getting so. I remember I used to, when taxes, I would do mine online, just put in this on the W-4 and this on the that, and it's done, and it's but now, oh my goodness.
Yeah, 99% of the people need a professional at this point, but you do need somebody you can trust. I wouldn't advise special business people and all of those, and that's nothing we even tapped on today. That's another big side, and that might be our January conversation. Business people needs to have some understanding too, because it's a lot happening to y'all right now.
Okay. So we definitely gonna have to have you come back and do another one for first part of January. Yeah. All right. So this has been Kitchen Talk CTC, Conversations That Cook. Listen, if you are watching us on our YouTube channel, make sure you hit that subscribe button, turn on your notifications so you will never miss another show. If you are watching us on Facebook, hit the like button. Also turn on your notifications so you will never miss another show. And we are going to be back on the next Thursday with another show. And it just keeps getting better and better. I appreciate you, Auntie V, for hanging out so much. And we're going to see you back in January.
Yes.
Yay. So for now, we will talk to you guys later. Good night.
Good night.
Let's talk. What you want to talk about? Let's talk. What you want to talk about? Kitchen talk. Let's talk. What you want to talk about? Kitchen talk. Let's talk. Conversations that cook. Kitchen talk. Let's talk. talk about? Let's talk. What you wanna talk about?